Welcome to The Explainer. Today we're going to dig into one particular analysis that claims to have found the single, powerful reason behind a massive global stock market crash. We're going to stick just to this one source's perspective to really understand the argument it's making.
So the story kicks off on August 26, 2025. And let me tell you, markets aren't just having a bad day. According to this source, it's a total freefall, a bloodbath as they put it, and it's being felt in every major financial center across the planet. From the US to Europe, all the way across Asia, the sell-off is just everywhere. It's deep. But here's the thing. The source we're looking at today says this is not just a random market correction. Nope. It claims there is one central figure behind all of this chaos. So, to get our heads around this, here's how we're going to follow their argument. We'll start with the sell-off itself, then look at the person they identify, the methods he's using, the wild geopolitics behind it, and finally, who really pays the price for all this.
Okay, let's dive right in. Section 1. Beyond all the red flashing on the trading screens, the source we're analyzing says there's a whole bunch of immediate pressures that have investors seriously spooked.
Now look, the source admits there are a few things going on here. People are cashing in profits after a good run, big foreign investors are pulling their money out, currencies are shaky, oil prices are climbing, but, and this is a huge but in their argument, they claim all of these are just symptoms. They are not the real disease.
Which of course brings us to the million-dollar question, right? The very core of this whole analysis. What does the source say is the one single thing that's causing all this instability? Well, they trace it all back to the actions of one person.
And the source doesn't beat around the bush. It argues flat out that the main driver of this market chaos is the President of the United States, Donald Trump.
The central argument here is that the president's very direct, let's call it unconventional, way of intervening in the economy and world affairs is creating a level of uncertainty that the financial markets just can't handle. It's too unpredictable.
So, okay, how is this actually happening? Well, this analysis points to two key weapons in the arsenal, so to speak: direct interference with the Federal Reserve and the aggressive, targeted use of trade tariffs. First, you got this major conflict with the U.S. Federal Reserve. The source says the president is demanding these huge interest rate cuts. We're talking 100 to 150 basis points, and is trying to stack the board with his own people to get it done, which really goes against the whole idea of the Fed being independent.
Second, and this is what the source says was the immediate trigger, is the use of tariffs, specifically a brand new 50% tariff slapped on certain goods from India, an action that sent this massive shockwave of anxiety through the global markets.
But why? Why use these tools so aggressively right now? This is where the analysis sort of leaves the world of pure economics and gets into geopolitics and, well, it even suggests a bit of psychology. The analysis speculates that one of the primary drivers here is a deep-seated desire to win the Nobel Peace Prize, and that it's all about competing with the legacy of his predecessor, Barack Obama.
And this slide just puts that into perspective. It's a really rare honor, you know? Only 4 U.S. presidents have ever received it. The source is claiming that this is the prize he's chasing, and he's willing to disrupt a lot of things to get there.
So the source then lays out this global chessboard. On one side, you have nations that really depend on the U.S. for their defense, like in Europe or Japan and South Korea. This analysis says they've basically caved to U.S. demands. But then you have countries that are pushing back, like China with its rare earth metals, or India on other issues, and they're the ones facing the economic heat.
And I love this analogy the source uses. It says, dealing with this strategy is like facing a mad bull on the road. It's unpredictable, it's aggressive, and it'll charge at anything it doesn't like. The analysis suggests that waving a red cloth, confronting it directly, only makes it charge harder.
All right, so this brings us to a super important part of the argument, these tariffs. How do they actually work? And more importantly, who's the one that really ends up paying for them? Because the source argues the public story isn't the whole story.
So let's just quickly define what a tariff is. It's basically a tax on goods brought into a country. But the source frames this as a tool that has become a source of free money or easy money for the U.S. government. Cash that's collected without creating any new products or services.
And what's really wild is just the sheer scale of this easy money. Look at this. The data presented shows that the monthly revenue from these tariffs jumped from an average of about $7 billion last year to a staggering $25 billion in July of this year alone.
And the long-term projection from this source is even more mind-boggling.
a potential $2.8 trillion in government revenue over the next decade. Trillions of dollars collected at the border. But you have to ask, where does that money actually come from?
Because it doesn't just appear out of thin air. This breakdown shows you the flow. The U.S. company that imports the goods pays the tax to the U.S. government. Then, that company, to protect its own profits, just passes that cost along by jacking up the price of the final product.
And in fact, this analysis estimates that while the foreign exporter and the American importer each absorb some of the pain, the vast majority, as much as 70% of the total cost, is ultimately passed on to American consumers. We're talking higher prices, inflation.
So, the big takeaway from this analysis is that all this free money for the government is basically a hidden tax on its own economy. The revenue that's being celebrated, it argues, is being paid for by American companies and, overwhelmingly, by American citizens at the cash register. And that leaves us with the final, really provocative question this source poses. Once a government gets used to this massive, easy stream of revenue, once it becomes a political addiction, what would it possibly take to turn it off? And can the global economy ever really go back to the way it was?